Today is Dry Bulk Shipping Stocks Investment Series 1. The value of Dry Bulk Shipping Company, SB. Before I start, I would like to say something about my style of presentation. I've been teaching in the university for a couple of years, so my presentation is I'm doing it like teaching in the classroom. So I would present my material slowly and give people some room to think. So that's just my style. Disclaimer: the content of this video is the author's personal point of view and analysis, which does not constitute any investment advice. If you're interested in this content, please use this link to join our Telegram group, where you will find more timely information and have the opportunity to participate in the discussion. First, my stock market theorems, principles, and laws. Number one, fundamental theorem of stock market. If a company is profitable and you reasonably believe that it will continue to be profitable in the future, then the value of the company's stock will not be lower than its estimated net asset value per share based on the market price of its assets. It's important to note that the estimated net asset value per share based on the market price of its assets is not the same as the book value per share shown in the financial statements. In terms of the dry bulk shipping companies, their vessels, on books they have certain value, but if you put it on the market to sell it, it may be different from its book value. In today's market, apparently the dry bulk ships is in high demand, so more likely the actual value, the market value of these assets will be higher than their book value. Second, the first principle of stock market: the price of the stock always fluctuates around its value in the long run. If the price of a stock is significantly higher or lower than its value, then over time, either its value will catch up with its share price or its share price will regress to its value. Third, the first law of stock market: the price of low-value stocks can be artificially propped up with funds for a long period of time. The market can stay irrational longer than you can stay solvent, but the price of high-value stocks cannot be depressed forever. Therefore, I can hold high-value stocks with confidence, waiting for the price to regress to its value, but I always be careful shorting any stocks. So that's just some experience I had in the stock market based on these theorems, principles, and laws. I do my investment, follow these theorems, principles, and laws. I made some money of it, so that's proved to be true to me. So I would like everybody to give them a think. Okay, here is some of my experiences. My first basket of gold comes from investing in RDN and MTG. I started to invest in these stocks in 2012. That's after the 2008, the housing market crashed, right? You see the this huge drop. These companies are mortgage insurers, so they insure mortgages. When the housing market crashes, a lot of people default on their mortgages. So these companies have to pay out insurance coverage to cover the loss in the mortgage by the banks. So they lost a lot of money. But in 2012, the housing market started to turn around. So I observed that, and I saw these stocks were selling for as they were going to go bankrupt. So I studied these companies, especially looking at their mortgage default rates. So the mortgage they cover, there's a default rate. I look at those trends. I sensed that there was a turning point in the default rate. These companies, more likely, they're going to survive. So if that's the case, buy these stocks in bargain price will get a huge return. So I started to invest in these companies. I remembered RTN, I got in like $2 something. MTG, I think it's in pennies. It's lower than $1. I remembered. And then I hold these stocks. There were ups and downs, and I eventually got out. I think only 1 or 2 years, not that long. I got, if it's $2, if you look at 2012, probably it's in here, and then in 2014, 2015, 13, in that neighborhood, 1 or 2 years, it's already up 7 times. So I got out at that time. But after that, it doubled from the price I got out. But I already got out because I found some other investment, some other better investment opportunities. I didn't follow it through up to 35 in terms of RDN. So 7 times my first basket of gold. And then the next is YALA. YALA is just a very short period of time. The price doubled from the price what I bought. In this case, this is a company. I look at it. Look at their business, their financial statements. This is essentially a very stable company. They are a internet gaming and chatting software. They collect fees from their customers, and their customer base is very stable. So essentially, they accumulated a lot of cash in their financial statements. Like 90% of their assets are cash, but their stock price, was, very depressed at that time. So I started to accumulate shares of this company, and then eventually people realized this is a gold, right? So they popped up the price doubled what I got. I got in less than $4, but they eventually went to none. But I got out around some 8 something, in that neighborhood. So I doubled my money on this stock. And then the next one, that's the SB and SBLK. I started at the end of 2015 when I got out of the RDN, that mortgage insurer. I started to invest in a dry bulk shipping companies, SB and SBLK. I'm still holding it, so until today. What happened in these stocks was in 2008, before the housing market crash, there was a booming in the commodity demand and shortage in the ocean transportation of these commodities like iron ore and green and soybean and coal and a lot of stuff. So the shipping companies, they ordered a lot of new ships. When these ships started to arriving at the shipping companies, the housing market already crashed. So the demand suddenly disappeared. So the price of these shipping companies also crashed. I remembered a lot of companies got bankrupt, and most of them got their stocks reverse splitted a couple of times. But SB was probably the only company, its stock price, although also came down, but they didn't have to do a reverse split. They didn't do that. So that's a very prudently managed company. When I got in I think it's end of 2015, about 2015, 2016, in that neighborhood, I remember the lowest price I got in was $0.4. Because of I studied the finances of this company, I believed this company was very good managed, and I didn't see it go bankrupt. So I started to invest in this company, and right in the ups and downs, if you look at this curve, at one time it goes to 3, 4, and then come down to like 2 point something, and then up to over 5, and down to like 2.5, 2.8, I remember, and then up to over 6, and then down to 3 something. But even though we see these ups and downs, the overall trend was upward. Uh, I will talk about this company in the very detail. So the reason behind this upward trend line is that the value is accumulating at this company. So as value accumulates, the stock price gets supported. But these ups and downs, there was some reasons for that. I think besides the seasonal phenomenon of the shipping rates, that's a major determinant of the stock price. There were some other events I think happened, like in 2018. If you look at it went down, the trigger was the trade war between U.S. and China, because China was is still a big importer of those commodities, iron ore and coal and green. And in 2018 was a trade war between the first Trump administration and China. So that's the trigger there. And then 2000, I think the others are just seasonal fluctuation of the shipping rates. Okay, next, let's go to SB. SB has 47 vessels. 39 of them are Panamax or slightly larger ships, and only 8 are Capesize. So this is a company, the majority of its ships are Panamax. So keep in mind this this fact. And the shareholders' equity, this number comes from their latest financial statement. they have preferred shares, so that equity total is 100 million. And then the common equity book value, you subtract that preferred from the total equity. That's the common equity. And then number of shares is this from their financial reports. And then we get net assets per share, 6.998. So just this one divided by this one. Remember, currently, the asset value of this company, all the shipping companies almost, are much higher than their book value. If you look at a lot of companies sell their old ships, majority of them are realizing gains on their the sale of those ships. The reason for that is that the price they got in the market is higher than their book value, so they got financial gain from sale of those old ships. That's the proof of what I just said. The net asset for these shipping companies, especially for SB, so they sold a couple of ships, realized sizable gains. So that means the actual value per share for this company is much higher than this book value. So this is very conservative number. And then next we have break-even TCE. TCE means time charter equivalent. So that's a measure of the ship rate. It's this number 13,500 comes from my calculation. I'll show you later on. And increase in EPS for every 1,000 increase in shipping rates. So this is 0.16442. So that's also from my calculation. I'll show you later on. Okay, this is the calculation. So if you have time, you can look at these numbers. But what I'm going to point out to you is this one, total TCE. This is a break-even TCE for this company based on their Q2 2025 financial statement. All these numbers are come from their financial statement. So if you're interested, you can study my model, how it's calculated. And this number is 1,000 increase in shipping rate to result in a increase in the EPS. So this is the formula. So you can look at this formula, and if you're interested, you can study it in more detail. So what I'm going to point out is this number. So it comes from here. And then the next one is Q1 2025. So I use 2 quarters data to get some sense that these numbers, they are not the same all the time, so they fluctuate. So in 2005 Q1, the break-even TCE is 13,000. This number is 0.1641. If you recall, I cannot go back, but that's 14 something for Q2. So the reason is because the cost of running this company, sometimes there are fluctuations, because of sometimes there are more dry docking, and sometimes there are more receiving new ships. They're all added costs, so it fluctuates. This number, 1,000 increase in shipping rate to result in the increase in the EPS. This essentially fluctuates because the number of ships changes. So here are 36 vessels, but for Q2 they have 47. Okay. So that's the calculation of these numbers. So we have current dry bulk shipping rate. Panamax is 16,000. So that's pretty much the average throughout the third quarter. So that's the quarter we're concerned about. Next, net asset per share. So that's from the calculation. And break-even TCE, I will use 13,500. So that's basically a average of those, almost the average of those two quarters. So I believe it's appropriate number for the long run. Increase in EPS for every 1,000 increase in shipping rates. I just use the latest. So SB has 8 Capesizes and 39 Panamax. These Capesize, they have long-term contracts on them at around 25,000. Okay, the valuation A. So the first valuation model. This is the Panamax shipping rate. This is because the Capesize rate they're on long-term contracts much higher than the Panamax, so we can redistribute the amount that is over 16,000 into its entire fleet, and then we get a 1,500 more earnings per day for the entire fleet, and then that minus 1,700. That's commission plus voyage together per ship per day. You use a shipping rate minus that, what you get is TCE, time charter equivalent. So TCE minus break-even TCE, that's TCE surplus 2,500 per ship per day. Remember, every 1,000 increase in TCE surplus will result in 0.1642 increase in the EPS. So now we have 2.3 times of that 1,000, and then that times 0.1642. So that's the EPS equals 0.3777. So that's essentially under the current shipping rate, SB annual EPS will be 0.3777. So if we translate that into stock price, we use 15 PE ratio to translate that into stock price. That is 5.67. Remember, 17 is the SP 500 30-year average forward PE ratio according to JP Morgan. So this should be ratio. So that's a typo in there. So we use 15. That's kind of a little bit conservative than the 17 of the average number. So I believe this valuation is also conservative, 5.67 per share for SB. So a valuation B, this is another valuation model. We just use the current asset per share. Remember, this company is profitable and continue to be profitable, I believe, in the near future. So its value per share will not be lower than its net asset per share. But if we go beyond that 6.998 for 1 quarter, so we add 1 quarter EPS into this number. That's 0.377 divided by 4. That's 1 quarter, 0.794. So we add those two numbers together, we got a 7.092. That's a near-term evaluation, another model. So the third model is we use 1 year EPS added to the net asset value per share. So we got 7.38. So based on these three models, we we take a holistic view on this, and we combine this valuation together, we got the current value range for SB is between 5.6 and 7.3. The reason for current share price wandering below its value range is that market is discounting the risk that the current shipping rate may not be maintained. So remember, there are fluctuations in the shipping rate. So if people have some fear that these shipping rates may go down, in the future for some time, so they essentially want to avoid that risk, so they give some discount to the share price. So that's why the current share price is only at $4.3, so that's much lower than this value range. So the more we see the shipping rate firming up, people got more confidence, then the higher the share price will go until it reaches its value range. So that's the thing, how things will go in. That's that upside trend line you see in the previous page. In addition, the company is paying dividends. Dividend yield is 4.65%, a pretty good return, much higher than the treasury return, and much higher than the bank savings, right? And the current share price is $4.3. Some final comments. Many people only see the SB stock price declines of the past before 2016. Essentially, when in 2008 the housing market crashed, and then shipping company, as I said, they ordered a lot of ships. So that when that ship, it takes 1 or 2 years to build a ship. If there are so many orders, there are maybe 3-4 years before it can be delivered. So because of that, when the ship comes in, the market crashed. So that's the sharp decline in the SB stock price. But some people only look at that period, right? They're not able to see people making profits there after the 2016. In the meantime, the stock price of SB often fluctuates with sizable ups and downs. So you look at the even though the trend line was upward, but there are fluctuations, right? So when it goes down, people unable to discern the upward trend line. So basically, they're just idiots, stupid. They only look at the down period. They were not able to spot the value of the company and the upward trend line. Therefore, they often disparage this company, and the people got confused. So a lot of people got confused by them. So that's why I'm going to say something. I don't care what they say essentially, but I don't want people get confused because of those stupid comments comes out of those idiots. So they did the same on YALA. Now this stock's price has doubled, and then suddenly nobody is talking about YALA. They said the same thing about YALA when the price was below 4, but after the YALA's price doubled to 8, 9, they suddenly shut up. The price of a stock will not always stay below its value by a large amount for a very long period of time. Eventually, its price will regress to its value. The epic upside regression of YALA's stock price is an excellent example. Currently, the new ship order book is still running very low. In addition, rapid changes in environmental regulations have made shipping companies even more reluctant to order new ships. Therefore, there will be no significant increase in dry bulk shipping capacity supply in the next few years. So it usually takes 1 to 2 years to build a ship. So if the demand for dry bulk shipping increases rapidly, the ships will not be built immediately and the freight rate will skyrocket. The potential catalyst for dry bulk shipping rate increase in the demand side include the infrastructure projects in the US, India, and other countries to receive the companies moving out of China due to the tariff war and the prolonged disputes between China and the US. So a lot of companies are moving out. So they need to construct their factories and a lot of things, infrastructure. So that all creates demand for commodities. The possible economic stimulus in China. So the Chinese economy is in pretty bad shape. So they may need to to lay out some stimulus measures that will create a demand for commodities. Arms race around the world to build ships, tanks, and artilleries. So because of the Ukraine war and a lot of conflicts around the world. So there, and also Trump demands the NATO countries to spend more on the military. So that creates a lot of demand for ships, tanks, and artilleries. And the upcoming rebuilding of Middle East and Ukraine after the war. The Middle East war is close to an end, and probably Ukraine war is hopefully will end sometime. So the rebuilding of those countries, those areas, will create a lot of demand for commodities. The impact of Trump's tariff war will largely be on the container shipping. Its impact on the dry bulk shipping will be much less. People often get confused with these two very different shipping segments. So no matter what, people will need to eat grain, animal feed of soybean and soybean oil for people, and coal for power generation, and iron ore, and coking coal for the steel production. So that demand will always be there no matter what. Finally, the risk of investing in dry bulk shipping stocks is mainly on the shipping rates, and it's the single most important factor that will dictate the direction of stock prices, and people investing in dry bulk shipping stocks need to pay close attention to the direction of shipping rates. I personally track the shipping rates every working day. When there is a new number comes out, I'll record it on a sheet of paper. So I have so far kept like 4-5 pages of those records of shipping. That's shipping rate indexes. That's called Baltic Dry Index, BDI. So I keep a record on all of those shipping rates in order to look at the trend, the historical trend. There are also a separate index for each type of ships. There's a Capesize, Panamax, and there is a Supramax, the index shipping rates. So that's the end of my presentation. Hopefully that will help you to make some money on these value stocks. Okay, that's a jump. Hopefully that's the jump in the stock price. Thanks for watching. If you are interested in this presentation, please subscribe to my channel and click on that reminder bell. I think there's a bell. You can click on it so that next time when I have a new presentation, you will be notified. If you're interested, you can also go back to look at my past presentation. I had a presentation for the YALA, so that's 1 year before its price doubled. When I was investing in that company, I produced a presentation. That's 1 year before the stock price popped. So you can go back to look at that history if you're interested. It's under my channel. Thank you very much.